What's up, guys? Crypto Noah back with another yield farming video. In this video, we're going to be talking about chasing versus trapping yields when yield farming. Okay, so in this video, I'm going to cover what yield farming is, what concentrated liquidity is, the advantages and disadvantages of chasing and trapping yields, because it depends on what your strategy is and a couple of other factors that should determine if you should be chasing or trapping yields. So we're going to talk about it. Before we get into it, I do have to say none of this should be taken as financial advice. These are my own perspectives, research, and opinions, and they should be treated as such. So without further ado, let's jump straight into it, starting off with what is yield farming and what is concentrated liquidity. Like I always say, it's 4 ways to get a yield in crypto. You can stake on a blockchain staking contract like ETH 2.0 and get a yield for securing the network. You can stake your funds on a borrowing and lending platform or a money market platform such as Aave, Compound, or Radiant, like we talk about on the channel. You can stake your funds on an insurance platform and use your funds to facilitate insurance premiums. And the fourth way, the way we're talking about in this video and the way we always talk about on this channel, the most profitable way, stake your funds on exchanges, decentralized exchanges rather, and you get paid passive income anytime someone swaps back and forth in the pool you stake in. So let's say you want to deposit funds in the ETH/USDC pool. Anytime someone swaps from ETH to USDC or USDC back to ETH, you make passive income. The amount you make is dependent upon how much your liquidity makes up in the pool and the volume to TVL ratio, and I made many videos on this. Now, concentrated liquidity, what is that? Concentrated liquidity actually allows you to determine the price range whereby you want your liquidity to be used, right? So before Uniswap v3, you were just providing liquidity for whatever the price of ETH was. And the problem with this is your capital wasn't as efficient because it wouldn't be used sometimes. But the advent of concentrated liquidity, even though this is how market making works in TradFi, you can say, hey, only use my liquidity when the price of ETH is between 2 to 3,000 or 2 to 4,000, whatever price range you determine. And it rewards smart liquidity providers, okay? So now that we understand yield farming and concentrated liquidity, let's talk about chasing and trapping yields. Let's talk about what they are first, and let's go through the advantages and disadvantages of both. So chasing yields is exactly what it sounds like. You see a liquidity pool has been performing well and you think it's going to continue, so you chase the yield, right? So you hop in because, historically it's been performing well. For these reasons, I think it'll perform well in the future. You want to have a thesis as to why you think it'll perform well in the future. And then you hop in and then you just kind of ride that wave, just like you ride a trend. You know what I mean? You get a break and a retest, or you get a breakout and you think it's going to keep going, so you chase the trade, right? And trapping it would be like, not waiting for the breakout. Like you're trapping it. So when the breakout happens, you trap those gains. What we're talking about with trapping is trapping the gains. Okay. So the good thing about this strategy is, it can work. Like if you see ETH trending upward, like let's say ETH is at 2,400 at the time of recording this video. Let's say it goes up to 26, 27. It breaks a major support and you think it can go to 3 or 4. So you're chasing the yield, right? You think it's going to continue. So you hop in and that could work out great, right? That's the upside. It can work out. The downside is you could be a little too late and then the yield slows down or immediately goes out of range. It drops and now you experience impermanent loss. Impermanent loss isn't good or bad. It depends on your strategy, but it can be bad and it can be good. So another downside to chasing yields is that it takes more time, right? Because something can go up one day, something can go up the next day, something can go up the next day, and you're chasing. And this is just like day trading, right? You go on your computer every day, you boom, you look for your trade setups, you have your risk reward ratio, your take profit, your stop loss, all of that. It's kind of the same thing. Right? If you want to take the time to do that, that's good, right? Do you? There's multiple ways to skin a cat, okay? But me personally, I prefer to trap yields, right? So let's talk about what trapping yields is and the pluses and minuses to it, okay? So if I had to give another analogy to compare trapping to chasing, trapping is like hunting an animal. Like let's say you're trying to kill a bear. You're probably not going to chase that motherfucker. You probably set up a bear trap, right? Because bears run fast. It can turn around and kill you. Depending on, if you're chasing, unless you're chasing it in a tank, which, you probably won't even be able to catch it because tanks are slow. So you want to set up a trap, right? And the cool thing about it is that, a lot of times while you trap yields, you can trap yields and you can still make money while you're trapping it. Like if you're hunting a bear and you set a bear trap, you don't get anything until the bear gets caught in the trap, right? Or if you're trying to catch a bird, you don't get anything. If I use this as an analogy to yield farming, it's almost like you're setting a bear trap, but the bear walks by and it's ripping off little pieces of flesh, putting in a trap, different bears, until a whole bear gets caught. So it's like you're still eating while you wait on that huge trap, which is a large candle, right? Like if it's in range, you're still making money, but that huge candle that you're anticipating, that's where you're really going to eat, okay? So if I wanted to chase some yields, and I do both, like there is ways to chase yields and it not take a whole lot of time. It's just if you're not doing it super often, So like this real wrapped ETH pool, 887% APR. That's pretty good, right? 8.11% TVL ratio. If I click on it, you get all this data. By the way, if you want access to this tool, a world-class community, a yield farming course that's 13 hours that covers everything, access to professional coaches, and a world-class community of farmers and investors, click the link in the description, book a free strategy session with me. I'll answer all your questions on yield farming, crypto, investing, whatever, and we'll ultimately see if our program is a good fit for you. If it's not, hey, at least we'll most likely have a good conversation. I digress. So if I go here, you can see the APR on the multiple dates, right? So if I wanted to chase it, I'm just looking at the yields and I think the yield's going to continue. But if I wanted to trap it, I will go to my Rio chart, think about like, okay, what price do I think Rio can get to? Me personally, I definitely think it's going to exceed all-time highs. And I called out in my group that this is a pretty good trade. So we made money off this breakout trade. I did enter into a second entry here. I think we'll bounce off, probably blow through this. We might stop here, come back down, test. And eventually, I think we're going to have to get within this channel and turn this into support, right? And I want our 62 on top of our on top of our 200-day EMA or 200-day moving average. So if I wanted to trap this, I would set a range from like where it's at to where I think it can go in the short term or the long term, whatever my time frame is, versus chasing. I'm like, yo, the yield's really good right now. I want to stay in this range, farm it tight. If I'm trapping it, I want to benefit from this huge green candle or huge green candles that'll get us up here. And you can do both. Like you can set tranches. You can chase it, make a small range from like 5% above and below current price, and make a wider range so that you can make the yields from those large movements. Now, the cool thing about trapping is that it takes less time. Like I've been talking about my Maple ETH pool. I finally had to rebalance it, right? Because it's been out of my blue range for a while. So this green range is my new range, and I'm trapping it because I do think we'll get up here, right? I want these candles. I want to be able to benefit from these candles. Even if it's a big red candle or a big green candle, making money from fees. Now, the downside to trapping yields is that you could have set a trap that it never made, while you could have just been farming narrow. So like, for example, I've been in this range for almost a whole year since back here, and it went out, came back in, and it went out. And my trap failed right here because I didn't rebalance until the other day, and I missed out on like 2 to 3 weeks of yield. You know what I mean? And it actually made me change my rule to where I'm not going to just wait for a break and retest, but if it's out of range for more than a week, I'm rebalancing, because that's just yield I missed out on. But that's okay. I'm still learning. I'm still a student. I don't have it all figured out. I'm learning more every day. And, as I learn, I'll update you guys on my findings. Okay? But in my opinion, I think that time in the market versus trying to time the market wins out. I think trapping yields is a better strategy than chasing yields, just being honest. But I'm also talking from me personally, my investor makeup. I'm more of a swing trader. I like larger amounts of profit less frequently versus smaller amounts of profit more frequently. Those are the main two types of investors. It's good to know which kind you are, and we can help you figure that out. So yeah, that is pretty much it. You guys now understand the differences and the benefits and drawbacks with trapping and chasing yields. So if you guys have questions as to what you think you should be doing, what's most beneficial for your strategy. Like I said, book a free strategy session. Let's talk about it. Other than that, I like to conclude this video. If you got value, drop a like, drop a comment, share with a friend. Let me know what yield farming topic or crypto topic you want me to cover next. But other than that, I thank you guys so much for watching. I love every single one of you who tuned in, and I'll see you in the next video. Take care and trade safe.